In this video, Money Smart Basics will show you how to pay off your home faster with a 15-year mortgage or keep flexibility with a 30-year loan. The answer could save you thousands. Remember to like and subscribe for more Money Smart Basics videos. If you have any suggestions for financial literacy topics, please leave a comment. Stay until the end to receive a bonus tip. Hello everyone, Alfonso here. Today, we're talking about the biggest financial decision most people ever make: your mortgage. This isn't just a loan, it's the foundation of your home, your security, and your financial future. When you sign that mortgage, you're making a decades-long promise. The length of your mortgage, its term, shapes your monthly payments and your long-term wealth. Too many people rush into the first loan they're offered, missing the fine print and losing hundreds of thousands of dollars over time. The difference between a 15-year and a 30-year mortgage is more than just time. It's about your relationship with debt and your financial power. One path offers lower payments but keeps you in debt for decades. The other is tougher each month but sets you free much sooner. This is about choosing between short-term comfort and long-term freedom. We'll break down the numbers, pros, and cons so you can make a smart, powerful choice for yourself. This isn't about what the bank or your friends want, it's about you taking control. The mortgage you choose sets the pace for your financial marathon. Do you want to jog for 30 years or run faster and finish in 15? There's no universal answer, but there is a right answer for you. Let's get smart about this. Let's start with the most common mortgage, the 30-year fixed rate. It's popular because it offers the lowest monthly payment, spreading your loan and interest over 360 payments. This makes homeownership accessible, but at a steep cost. For a $300,000 loan at 6.58% interest, your monthly payment is about $1,912, excluding taxes and insurance. Over 30 years, you'll pay $688,320 in total. $388,320 of that is just interest. You pay more in interest than the house itself. That affordable payment means you're buying your home twice, once for you, once for the bank. Early on, most of your payment goes to interest, not equity. You're working hard, but mostly making the bank richer. The 30-year mortgage gets you in the door but keeps you paying for a very long time. It's a treadmill. Lots of effort, little progress at first. Understand the total cost, not just the monthly payment. That's the real price of affordability. Now let's look at the 15-year fixed-rate mortgage, the fast track to financial freedom. You pay off your loan in half the time with a lower interest rate. For a $300,000 loan at 5.92%, your monthly payment is about $2,521, $609 more than the 30-year option. Many stop here thinking they can't afford it, but let's look deeper. Over 15 years, you'll pay $453,780 total, only $153,780 in interest. That's $234,540 less in interest than the 30-year loan. Imagine what you could do with that money: college, retirement, or investing in your future. Yes, the payment is higher and requires discipline, but the rewards are huge. You own your home free and clear in half the time. Picture being debt-free in your 40s or 50s, not your 60s or 70s. After your mortgage is gone, that $2,521 a month is yours to save or invest. That's real financial freedom. The 15-year mortgage is about building wealth, not just paying off debt. It's a commitment, but the payoff is life-changing. Choose the path that lets you live on your own terms, not the bank's. Let's lay out the numbers side by side for our $300,000 example. 30-year mortgage, 6.58% interest, $1,912 month, $688,320 total paid, $388,320 in interest. 15-year mortgage, 5.92% interest, $2,521 month, $453,780 total paid, $153,780 in interest. The monthly difference is $609. That's not small. It could be a car payment or groceries. But the interest savings? $234,540. You're paying $250,000 extra for the privilege of lower payments. With the 15-year loan, you're mortgage-free 15 years sooner. If you invest that $2,521 each month after your mortgage is gone, you could build a massive nest egg. The 15-year mortgage isn't just about debt, it's a wealth-building machine. It forces you to build equity faster, saves you a fortune, and frees up your biggest expense much sooner. The numbers don't lie, the choice is clear when you look at the long-term impact. Don't just focus on the monthly payment, see the big picture, your future self will thank you. Every mortgage has pros and cons. Let's break down the 30-year loan. Pros: lower monthly payments make homeownership accessible and provide flexibility for emergencies or other expenses. Some people invest the difference, but that takes discipline most don't have. Cons: you pay a huge amount in interest, often more than the home's price. You build equity slowly. Most early payments go to interest. You could be in debt well into retirement, adding stress and limiting your options. The low payment can trap you in a long-term debt cycle. Ask yourself, is short-term relief worth decades of extra payments and lost wealth? Don't let the promise of affordability blind you to the true cost. Know what you're trading for that lower payment. Now the 15-year mortgage. Pros: massive interest savings, hundreds of thousands of dollars stay in your pocket. You own your home in half the time, build equity fast, and get a lower interest rate. The security and freedom of being mortgage-free in 15 years is life-changing. Cons: higher monthly payments require a stable income and strict budgeting. Less flexibility if your finances take a hit. If you don't have a solid emergency fund or stable job, this can be risky. You're committing more of your monthly budget to your home. The 15-year loan is for those with their financial house in order. Be honest about what you can handle, don't stretch too far. What if you already have a 30-year mortgage? You're not stuck. Refinancing can be a game changer. Let's say John and Jane bought a home 5 years ago, $300,000 loan, 30 years at 7.5%, $2,098 month. After 5 years they owe about $284,000. Interest rates have dropped. They refinance to a 15-year loan at 5.92%. New payment, $2, $388 month, about $290 more. Old path, they'd pay $455,280 in interest over 30 years. With refinancing, they'll pay $145,840 in interest on the new loan. Add the $105,880 interest already paid, and their total is $251,720. They save $203,560 in interest and become debt-free 10 years sooner. In 20 years, they own their home outright instead of 30. Refinancing is a powerful way to take control and save big. Don't be afraid to explore your options. So, which is right for you, the 30-year or the 15-year mortgage? The 30-year is the tortoise: slow, steady, lower payments, but a long, expensive journey. The 15-year is the hair-fast, higher payments, but huge savings and early freedom. If your budget is tight or your income unstable, the 30-year may be safer for now. But don't get too comfortable. Work toward making extra payments or refinancing later. If you have a stable income and can afford it, the 15-year is the smart move. Don't let banks push you into a 30-year just because it's standard. Paying more each month to save hundreds of thousands and own your home sooner is a powerful choice. Decide if you want to be an owner or a long-term borrower. The choice shapes your financial future. We've covered the numbers, the pros, the cons, and real-world impact. This isn't just about numbers, it's about the life you want. Do you want monthly breathing room but decades of debt, or a leaner lifestyle now for freedom later? My goal is to empower you with knowledge so you can make the best choice for your future. Don't be passive. Ask questions, run your own numbers, and be honest about your situation. Think about where you want to be in 10, 15, or 30 years. Do you want to keep sending checks to the bank or be free to use your money for your dreams? Your mortgage choice shapes your future. A home should be security, not a financial prison. Take control, own your home, don't let it own you. Your future self will thank you. Now go out there and be powerful. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. If you can comfortably afford the higher monthly payment, a 15-year mortgage can save you tens of thousands in interest and help you build equity much faster. The information provided in this content is for educational and informational purposes only and should not be considered financial, legal, or tax advice. Always consult with a qualified financial advisor, tax professional, or legal counsel before making any financial decisions. The creator of this content is not responsible for any actions taken based on the information provided. Investments and financial decisions carry risk, and past performance does not guarantee future results.